So, is this stock a falling knife that's finally bouncing, or is it, the most undervalued AI play on the market right now?
That is exactly the question everyone is asking this week.
Right. Today is April 20th, 2026, and we are doing a complete deep dive into SoundHound AI, ticker symbol SOUN.
It's definitely a wild one.
Oh, it really is. And before we get started, make sure you hit like on the video, subscribe to our YouTube channel, and honestly, you must leave your feedback in the comments. We really want to hear your thoughts on this one.
Are you a bull or a bear? We want to know.
Exactly. So our mission for today's deep dive is to basically tear through the financials, chart out the technicals, and really debate the bull versus bear case for SoundHound AI.
There's a lot to unpack.
There is. But really quick, just the mandatory disclaimer. This deep dive is strictly for educational and entertainment purposes, okay? It does not constitute financial advice. Always do your own research.
Yeah, please do. Do not just buy a stock because we're talking about it.
Right. So to set the baseline here, what exactly is happening with the stock price right now that has just, absolutely everyone talking?
Well, the volatility we're looking at on this stock is it's staggering.
Staggering is putting it mildly. We can't even begin to talk about the company's fundamental value without addressing the sheer violence of this current price action.
No, you really can't.
So looking at the dashboard, as of the April 20th close and heading into the April 21st pre-market, SoundHound is sitting at exactly $8.32.
Up a good bit today.
Yeah, up 2.97% just today. It's been drifting in this day range of $7.85 up to $8.35.
Right.
But those daily decimal points, they kind of mask the actual trauma on the larger chart.
Oh, the macro chart is brutal.
It really is. If you zoom out, you see the stock hit a massive high of $22.17 back in October 2025.
Back when the AI hype was just at its absolute zenith.
Exactly. And from there, it just suffered this catastrophic, a 62.5% grind downward.
Yeah.
Hitting a multi-month low of just $5.83, literally just recently, on March 30th, 2026.
It was a brutal unwinding. Long-term holders have been subjected to a textbook bearish trend.
Total nightmare for them.
Right. But what's fascinating here is the fierce bullish recovery trapped inside of that massive macro downtrend.
Yeah, the short-term action.
Exactly. SoundHound has rallied roughly 25.6% in just the last 7 days.
Just a massive swing.
And we're seeing heavy institutional level volumes suddenly stepping in. I'm talking 25.4 million to 43.4 million shares changing hands.
Okay, let's unpack this for a second because the chart looks like this violent roller coaster that just hit the absolute bottom and is aggressively, ratcheting back up.
Yeah, that's a good way to put it.
I'm looking at the order flow, and bullish call options are just massively outstripping the puts right now.
The ratio is wild.
Yeah, the options ratio is 0.1, which tells me the market is aggressively betting on an upcoming breakout.
Or at least a very sharp move upwards, yeah.
But, and this is a huge but, there is a massive red flag here. The short interest sits at 35%.
Which is incredibly high.
Right. So when over a third of the tradable flow is held by people betting the company will fail, a 25% weekly surge feels less like, organic conviction and more like a desperate scramble for the exits.
The squeeze.
Yeah. Are we just seeing short sellers panicking and covering their bets, or is there real aggressive conviction here ahead of earnings?
Well, you're definitely watching the mechanical reality of a short squeeze in real time.
Walk us through that.
Okay, so when you short a stock, you borrow shares to sell them, hoping you can just buy them back later at a lower price.
Right. Buy low, return the borrowed shares, keep the difference.
Exactly. But when the price violently snaps back, like up 25% in a week, your broker starts demanding more margin.
They start sweating.
Oh yeah, the pain threshold gets crossed. Short sellers are suddenly forced to buy shares at the current inflated price simply to close out their losing positions.
Right.
And that forced buying drives the price even higher, which triggers the next wave of short sellers to get margin called.
It's a domino effect.
Exactly. It creates this self-fulfilling feedback loop of upward price momentum. And what's fascinating here is how the options market accelerates it.
That 0.1 call-to-put ratio.
Right. Traders aren't just covering their shorts, they are actively buying out-of-the-money call options.
So they're throwing fuel on the fire.
Precisely. Because when you buy a call option, the market maker who sold it to you usually has to buy the underlying stock to hedge their own risk.
Ah, so you have short sellers forced to buy and market makers forced to buy.
It's a dual-engine technical surge, and in the short term, that can completely overpower the actual fundamentals of the company.
Wow. Okay, but a technical squeeze inevitably runs out of oxygen, right? Like, if there isn't fundamental fuel burning underneath it, it crashes.
Usually, yes, it needs a real foundation to sustain itself.
So to figure out if this price action is just a temporary technical blip or grounded in reality, we have to look under the hood. We have to follow the money into SoundHound's financials.
And this is where it gets complicated.
Right. Looking at the income statement, they hit record annual revenue for 2025 at $168.9 million,
Which is a staggering 100% year-over-year growth.
doubling their revenue. And the most recent Q4 revenue beat estimates at $55.06 million. I mean, 100% revenue growth usually makes investors throw money at a stock.
Top-line growth is undeniably impressive here. It shows real-world adoption of their voice AI. But the bottom line is why the stock got punished so severely over the last year. Net income is still negative.
Yeah, negative 14.0 million annually.
Right, which translates to a negative 2 cents in earnings per share.
They're inching toward break even, but they're still bleeding.
They are not a profitable enterprise yet.
And the operating cash flow is where the bleeding looks the worst.
Yeah.
Negative 68.20 million annually.
Yeah, that's a big number.
So let me give you an analogy here. Let's compare SoundHound to like a brilliant but eccentric startup founder who lives in this massive, fully paid off mansion
Okay.
because their balance sheet is incredibly strong. They have $248.49 million in cash and equivalents.
They're flush with cash.
Right. And almost zero debt, only 4.36 million in total debt. So
Right.
they own the mansion.
Sure.
But down in the basement of this mansion, they are just incinerating cash to buy insanely expensive lab equipment.
UND spend.
Yeah. I mean, 100% revenue growth is amazing. But does that justify burning $68 million in operations?
Well, you have to contextualize why they're burning that cash.
Okay, tell me why.
Because AI companies absolutely must burn cash right now just to stay relevant. That negative cash flow isn't a failure. It's the cost of entry in the voice AI arms race.
So it's not lavish corporate retreats, it's server costs.
Exactly. If you decide to pinch pennies today, your model falls 6 months behind, and enterprise clients will instantly jump ship to Google or Amazon.
Right. So institutional investors don't see the 68 million as reckless. They see it as mandatory.
Exactly. As long as that 248 million cash buffer holds up, they're fine with it.
Okay, but if the company is growing at 100% and the cash burn is justified, who actually believes in this balance sheet? Because this leads us right into the insider activity.
And this is always a hot topic for retail
I
investors.
get sure, because the optics here look terrible. In late March, right when the stock was near its 52-week lows around $6.79, there was significant insider selling.
Yeah, a noticeable amount.
The CEO, the CFO, and the COO sold about 308,000 shares total.
Which sounds scary on the surface.
It does. If I see the CEO dumping shares at $6.79, my instinct is to run. Why shouldn't retail investors panic when the C-suite is bailing out at the bottom?
Well, this raises an important question about how executive compensation actually works.
Okay.
The sources confirm this selling was primarily for tax obligations, not a lack of faith in the company.
Oh, like restricted Stark units vesting.
Exactly. When those RSUs vest, the executives get hit with a massive tax bill. So there are automated, pre-scheduled plans to sell a portion of the stock just to pay the IRS.
Ah, so it's administrative, not strategic dumping.
Right. It's routine. But what's far more interesting is why institutions are eagerly buying what the insiders are passively selling.
Because there hasn't been any significant open market buying from insiders recently.
Right. It's the institutions buoying the stock right now. They're looking at the recent partnerships.
Which explains the analyst consensus, I guess, because right now the consensus is sitting between a moderate buy and a strong buy.
Analysts are very optimistic.
The average price target is $14.93. Keep in mind, we're at $8.32 today.
That's a huge implied upside.
Huge. H.C. Wainwright has a high target of $20, and even Piper Sandler at the low end is targeting $9.
So even the bears on Wall Street see it higher than it is today.
Right. But the analysts might have high price targets, but do the technical charts actually support a run to $14 or $20 right now?
Let's check the momentum because the chart's still a very specific story.
Yeah. What are the key levels here?
Currently, the stock is testing significant overhead resistance. If it pulls back, your primary support level is $7.33.
And below that?
If that breaks, you're looking at a potential slide back down to that 52-week low of $5.83.
Okay, but what if the bulls keep pushing?
The immediate pivot resistance is right at $8.31, which we're essentially battling right now.
Right.
Clear that. And resistance 1 is at $9.59.
Yeah.
But the absolute critical level is the 200-day simple moving average, sitting way up at $11.25.
And staying below the 200-day SMA is like a classic signal of long-term weakness, right?
Exactly. The 50-day SMA is rising at $7.50,
Oh, yeah.
which is a good short-term sign. But that 200-day SMA is a massive ceiling.
Here's where it gets really interesting, though. The momentum.
Oh, the RSI.
Yeah. The 14-day RSI, the relative strength index, is currently at 79.7.
Which is extremely overbought.
Extremely. I always compare an RSI of nearly 80 to redlining a car engine.
That's a great analogy.
You know, it's running way too hot, everyone is flooring the gas, and it is just bound to overheat and force a cool down.
I completely agree. And this is exactly why retail traders often get trapped here.
How so?
Well, they see the stock up 25%, they see the AI headlines, and they buy into the FOMO, the fear of missing out,
Right at the top.
exactly at the top of an overbought spike. And mathematically, an RSI of 80 almost always precedes a short-term pullback or a cooling off period.
So they buy, the stock cools off, drops 10%, they panic sell at a loss, and then it bounces again.
It's a psychological meat grinder.
It really is. Which brings us to the core debate of this entire deep dive.
The big question.
Right. We have a company with 100% growth but a high cash burn. We have high analyst targets but incredibly overbought technicals.
A total paradox.
So is SoundHound truly an undervalued gem, or is it just a classic value trap?
The valuation paradox is really interesting to look at.
Yes.
Simply Walsing calculates the stock at 71.7% undervalued,
Wait, really? Based on what?
based on their projected future cash flows.
Okay, future cash flows. But present day.
Present day, the price-to-sales ratio is an astronomical 44x.
44 times sales.
Yes, which is very high, even compared to other hypergrowth peers in the tech sector.
That's like paying for a tiny house at the price of a mega mansion, just because the tiny house has, like, futuristic smart lights.
That's a fun way to look at it.
I mean, you are paying a massive premium for the promise of the technology, not the current reality of the revenue.
Exactly. Now, the bull case argues that premium is justified because SoundHound is a market leader in independent voice AI.
Okay, what's their primary argument?
Well, they point to the 100% year-over-year growth, and they're targeting gross margins of over 70% with something called agentic AI.
Agentic AI, meaning AI that doesn't just answer questions, but takes actions for you.
Precisely. And they have massive strategic partnerships validating this tech. They're working with NVIDIA.
Huge.
They have a deal with Associated Carrier Group, or ACG, to bring this AI to the telecom sector. And they are rolling out voice AI at Pete's Coffee drive-thrus.
Okay, so the bulls see massive B2B enterprise adoption, but what is the bear case?
The bears point to the persistent unprofitability.
The $68 million cash burn.
Right. And intense looming competition from big tech. Apple, Google, Amazon. Plus, there are macro risks like tech sector multiple compression. Investors aren't paying 44 times sales in a high-interest environment as easily as they used to.
I really have to challenge the bulls on the big tech point.
Okay, let's hear it.
Can David really beat Goliath here? Like, what stops Apple or Google from looking at the Pete's Coffee drive-through tech and just cloning it with their infinite engineering budgets and crushing SoundHound completely?
It's a very valid fear. But if you look at the best-case recovery scenario for SoundHound, it's about monopolizing niches where big tech just isn't focused.
Like telecom routing in coffee shops.
Exactly. Apple wants to sell you an iPhone ecosystem. They aren't heavily focused on the acoustics of a greasy drive-through speaker. If SoundHound becomes the default plumbing for those specific enterprise needs, they win.
But the worst-case scenario?
The worst-case continuation lower is that the cash burn catches up to them before they can secure those niches. And meanwhile, competitors eventually clone their tech, and that 44x multiple just collapses.
Ouch. So weighing the bulls against the bears, what does the actual timeline look like for a listener who is watching this stock right now?
You really have to split it into short-term and long-term.
Okay, let's start short term. Days and weeks.
Expect extreme volatility leading into their May 7th, 2026 earnings report.
Which is just right around the corner.
Right. The bullish momentum can absolutely persist if that $8.31 immediate pivot resistance turns into solid support and holds.
Because of the short squeeze mechanics.
Exactly. But it's risky. Now, for the medium to long-term outlook, the technicals matter less.
What matters then?
Success hinges on hitting their guided 2026 revenue target, which is between $225 million and $260 million.
They have to hit that guidance.
They do. And they finally have to break even on EBITDA. They have to prove they can operate without burning cash.
So what are the key catalysts long-term investors should actually be watching?
Keep your eyes on the expansion of their agentic AI platform into the telecom sector with that ACG deal and the continued rollout of Pete's Coffee.
Real-world adoption metrics.
Yes. If we connect this to the bigger picture, short-term traders are basically gambling on an earnings short squeeze, while long-term investors are betting on the fundamental success of telecom and coffee partnerships.
That perfectly summarizes the ultimate tension here. SoundHound is this undeniably fast-growing, flush with cash AI pioneer,
Right.
but simultaneously they are technically overbought, burning millions in cash every quarter and trading at a steep premium against giant competitors.
It's the definition of a high-risk, high-reward setup.
Truly. Now, as a reminder to everyone listening, this discussion was a natural debate based on the sources provided. This is not financial advice, and you must do your own research. But I want to leave you with a final, provocative thought to really mull over. With big tech breathing down their necks and a highly anticipated earnings report dropping in just a few days, will SoundHound's voice AI be the one shouting from the mountaintop, or will it be completely drowned out by the giants?
This will be fascinating to watch.
It really is. Don't forget to like the video, subscribe to the YouTube channel, and leave your feedback in the comments. We want to know, are you buying, selling, or holding SoundHound? Thanks for joining us on this deep dive.